Welcome back, Mario. Good to have you.
Great to be with you, particularly on a robust day and just before Thanksgiving. So I can wish you and all the traders
Indeed.
and investors the best.
A happy Thanksgiving to everyone. So what about Disney, Mario? Clearly, this was celebrated by the markets, Iger's return yesterday. Do you share that optimism about his return?
Great question. You go back when Eisner left, he wanted Frank Wells to succeed him. Frank died in an airplane crash. Mike Ovitz was hired. Mike Ovitz left very quickly. So then Iger took over, and now you have a similar change. And from my point of view, the franchises are terrific. The stock is interesting, and obviously with a market cap of $220 billion enterprise value, that's the same enterprise value as Comcast. But when I look at this whole ecosystem of entertainment, aside from, we can talk about streaming music later, but independent of that, you have a company called Paramount. Paramount has almost $20 billion of content spend, and that compares with $30 billion for Disney, and it compares with similar amounts, smaller amounts for Netflix and so on. And so when you look at a company with an enterprise value that is 661 million shares times $20 approximately, and then you add the debt of $11.5 billion minus what they're going to sell Simon & Schuster for, and then you look at the cash flows and you look at Bob Bakish doing a very good job, I've got a double or a triple, and yet it's selling at a fraction of the market value of Disney. So I like the ecosystem. I give the viewer what they want, how they want it, where they want it, when they want it at the lowest cost, and they'll all do that. Meanwhile, we're talking about sports and entertainment. I don't want to get into, but, baseball.
I knew you were going to bring this up. Wait, Mario, before you move to baseball, because I do want to talk to you about that, I just want to zero in on something you said. So you're more excited about Paramount than Disney. I know you're a shareholder of both stocks, but it sounds like you took that question and you said Paramount's trading in a better spot for you. And by the way, Warren Buffett's been buying it.
Sure. If you're Amazon, if you're looking at how much you're spending on content, Amazon is spending like $17 billion. You can buy all of Paramount. Now, you'll have to pay up, but that's not the point. The point is that which is going to be successful? Both. But if one is more successful, do I get a double or a triple out of Paramount? All they have to do is eliminate the dividend, do a few other minor financial engineering, and it works. So don't ignore Paramount just because short-termism is having a challenge. Don't forget, in 2024, linear television, including the O&Os at both Paramount, and if they sell those or spin them or do something else that would be more interesting to an Amazon or an Apple. But basically, you're going to have a tsunami in political spending, and that's not baked into these companies. And in addition to that, the amount of losses in the direct to the consumer will start coming down. So you got to be positive.
Yeah.